Hey Trey, this is Ryan with TrendLizard.com. I got your email. We're going to take a look at PDBC for you. This is an ETF, an interesting one. It's the Invesco Optimum Yield Diversified Commodity Strategy K1, no K1 ETF. Not sure what that last part means, but moves in decent lockstep with oil, other commodities. So we're going to take a look at it from its inception back in 2014. It had a lot of back and forth action. One of the clearest things about this chart is the three-wave nature of the recovery to the upside here and the pullback here. This all looks like counter-trend price movement. We can talk about it till we're blue in the face. Doesn't really matter. It's all been retraced by this big, clearly trendy up leg that's happened off the 2020 low. So no matter how you slice it, this is counter-trend price action. This is clearly trendy price action. It looks very bullish, and I think it is pretty easy to see that this looks like a five-wave move that is nearing completion. No matter how creative you want to get, there's just nothing that's happened to the downside basically for about 2 years now. That would suggest that at any point this up leg has been corrected and is setting up the next up leg. So the bottom line there is I think you have to consider this kind of an end stage move. It looks like a five-wave move that's likely in its fifth wave and getting very close to an end. But it's not there yet, so as long as that's the case, higher prices can be expected. But I think that certainly has to be taken into the right perspective of where it's at, and to understand that it's probably much closer to a high, at least for this run, than it is to a low. Obviously, when this five-wave move completes to the upside, like any five-wave move, we expect it to be corrected by a larger ABC pullback that should retrace basically 40 to 60% of this up leg here. So let's go ahead and zoom in and look at this up leg a little bit closer. There's a couple different ways to label it. One way is shown here, first, second, third wave here, fourth wave, and then a larger, probably extended fifth wave advance to the upside playing out off of that fourth wave low. This is one possibility. Note that if this possibility is correct, it'll stay above 1450 at all times. I think that's a key level that we'll see more than once here. So here's a different way to label it. Kind of changes the internals. I couldn't really settle on what made the most sense. I think they both make just fine sense, but I think the important thing, again, to notice is 1450. Under any circumstance, we shouldn't see a move below 1450 as long as this up leg is in play. So I think that's the key level to use as a stop if you own this guy, or if you're trading it. As long as it's trading above 1450, higher prices will be possible. So let's go ahead and zoom in on this price action here off of November's low, I believe, just to see where it is in its progression, to see if it's getting closer to a five-wave move. Here's a look at that, and this is where it looks a ton like the oil ETF that we follow, and it looks like a very trendy move that is not yet complete. There's probably different ways you can label this action. This is the best labeling I am able to find. Looks like it's getting later in the game. Looks like it might have embarked on a internal fourth wave pullback, as you can see here. But again, there's no sign yet of a high. A move above 1640 at any time confirms that the trend is still up, which is what we expect. Again, we'd want to see a five-wave move take shape to the upside, and then for there to be some indication of a high at that point, some type of sharper breakdown that indicates a high is in before you back off this guy. I think in the meantime, you can be bullish. And again, that level 1450 is the most important level on the chart. As long as it's trading above that level, you can expect this thing to continue higher and give us a nice clean five-wave advance. So I say be bullish. Just keep it in perspective. It looks like it's getting closer to a high to that advance off of the 2020 low. And once it does, then you'd have to expect a much larger pullback. Again, something that retraces maybe 40 to upwards of 60% of that up leg that's happened off the 2020 low. So hope that's helpful. Have a great weekend, Trey. We'll talk to you again soon.